morning to our distinguished delegates, our trustees, our principal officers, the regulators, our investment professionals, the service providers in the room, and of course our colleagues from across the continent. Thank you for joining us for this session. It's a privilege to welcome you to this very important conversation that basically focuses from the allocation of contributions of members, how do we embed that into an outcome that makes sense for our members? So for many years, pension fund discussions have always focused on markets, mandates, benchmarks, asset classes. So this time we're going to look at something a bit more different, because although everything is critically important, as fiduciaries, we carry the responsibility of protecting and growing members' retirement savings. And this is getting more and more difficult in a geo-complex world that we live in. So today we're calling to the deeper question. What do those investment decisions actually mean to the members whose futures depend on them? But I'm pretty sure you're not here to listen to me. So to take us through this topic today, we have Nazlie Seegers from SALT, an absolute professional who's spent over 17 years at the intersection of people and employee benefits, and her driving belief is that every member deserves to be treated with fairness and with dignity. She's an experienced officer at SALT. She is the Chief Experience Officer at SALT Employee Benefits, and she brings a rare combination of technical depth and human-centered thinking in everything she does. Okay, her experience spans consulting, administration, data reconstructing, member contributions, and she has successfully led and implemented large-scale benefit programs for funds with significant member bases. She holds a Bachelor of Science from the University of Witwatersrand, and she's a certified financial planner too. She has that qualification from the Millpark Business School and is currently completing her governance qualification through the CGISA. At the heart of her work is a simple but a powerful conviction that the member experience is not a nice to have, it's a minimum standard. So, without further ado, Nazlie, I hand the mic over to you. Please welcome her to the stage, everyone.
Thank you, Yvette, for that kind introduction. Good morning, everyone. Sorry, I'm a little bit congested, so if I sound funny, that is why. I don't promise to be as funny as the minister. I didn't expect quite so many jokes from a finance minister. But good morning. I want to start, before we even start switching slides, with a little thought experiment. Can I ask all of you to take your smartphones out of your pockets? Very contrary to what we usually do, right? We usually say put them away. Can you take them out of your pockets for me, please? Unlock your phones and open your banking app. No? Okay. If I say to you, transfer me 100,000 rand. Let's imagine you have 100,000 rand. Better? Okay. Let's start there. So I'm saying, transfer me 100,000, right? I'm going to invest it for you over 30 years. But while I'm investing it for you, I can't guarantee what you'll get out at the end of the 30 years. Also, there'll be times where you log in and it'll be less than 100,000. Don't stress, I got you. It'll come back sometime. And at time, when you ask me to explain, I'm going to use terms like alpha and infrastructure and AUM. And at the end of the 30 years, you hope that it's more than 100,000. Would you transfer? Are any of you clicking transfer? Do you want my real banking details? But that's what we ask our members, right? It may not be 100,000, but it's 10% of their monthly salary. And we're saying, give it to us, you're in good hands. You don't need to understand it, just trust that there'll be something at the end of the 30 years. Okay, now that we've established that not lots of us have 100,000 in our bank accounts, no asset managers in the room. Okay, we're talking about from allocations to outcomes, embedding the member experience into investment decision-making in African pension funds. Okay, so previously we had a relationship where the fund worked through the employer and the employer dealt with the member. You all remember those good old days, or is everybody in the room very young? Then came the default regulation, so benefit counseling and two-pot. And that completely changed the relationship, right? Now the fund has to engage directly with its members. So we're responsible, but we also have direct engagement. And so a lot has changed. Africa's investment opportunity. I'm not going to focus here because I think there's a lot of speakers speaking about this during the conference. But things that matter to members would probably be, these were the top 4 that I chose. Infrastructure, we heard the minister say that our border post is terrible and Zimbabwe's is amazing. Roads, ports, rail networks, etc. These are things that our members utilize. Energy. Energy security is fundamental to develop any economy. And Africa is lagging behind in that respect. Housing, affordable housing remains a challenge on the continent, not just in South Africa. And then technology. Technology is transforming economies across Africa, from fintech to telecommunications, etc. So that's the investment opportunity that we have. What do we talk about? Okay, the industry focus in discussions is on regulation. We heard the coffee bill is tabled, and so the whole industry is worried about the coffee bill coming in. We talk about alternative investments. They've become a major focus as funds search for diversification, inflation protection, and enhanced returns. Private markets, they continue to mature across Africa, and they are creating opportunities that weren't there previously. And then returns. Ultimately, all of these discussions come down to the returns, right? And trustees, as our kind facilitator said, have a fiduciary obligation to protect and to protect returns. Okay, so the question is, everybody's talking about unlocking capital. Africa's got 2.4 trillion money in savings, whether it's here or overseas, we've got money. But how do we unlock that capital while maintaining member confidence? That's the question that we want to answer today. So investment decision-making currently, and I've simplified it, so please don't attack me. I've simplified it, is we make a decision, the trustees, guided by the investment consultants and the advisors, determine how the capital should be allocated. And then the assets are allocated, and the asset manager takes the baton from there, and they will manage the investment to get the expected returns. And then performance. Success is typically measured through performance indicators, right? And then we talk about returns, benchmarks, funding levels, compliance with Reg 28, etc. So that's sort of high level what investment decision-making looks like now. Now, don't get me wrong. I'm not saying that this is wrong. What I'm saying is we need to, oh, we're changing clickers? Thank you. They gave me colored buttons. Okay, what I'm saying is we need to enhance this to talk to the member experience. So we take all of the first blocks, and what we add is member understanding. They need to understand why the decision is being made. So we go back to the 100,000. If I took 50,000 of that and invested it in a small holding in Walkerville, if you will, why'd I do that? As an individual investor, you'd want to understand that. There's no reason that our members are any different. So they need to know why a decision is being made. Member outcomes. Ultimately, member outcomes is why we're all here. That's the purpose of what we do, right? The coffee bill, TCF, all of those things talk to outcomes. So investing in getting a great return and beating the return we did last year is fantastic. But are we achieving the outcome? And you don't do that simply by beating the benchmark every year. There are other factors that we need to take into consideration, and I'll unpack that later in the presentation. Member behavior is critical to understand. And I don't think that as trustees, as boards, we take enough of that into our investment subcommittees. So the investment subcommittee doesn't sit and look at why are people withdrawing? Are they taking all of their benefits when they withdraw? How many times are people withdrawing in a life cycle? So even though we've consistently been beating the benchmark or providing a return, you could have 2 members in the fund, one that stayed there all of the time and didn't disinvest, and another one that, sort of withdrew 2 or 3 times, particularly in sector funds, and they could have very, very different outcomes at retirement. And so you've got to be taking that data into your investment SC to see, as boards, to understand how are members behaving and how is that impacting on their ability to get a good outcome at retirement. Okay, everybody still with me? We're all thinking about the 100,000 that's not in your bank account. Okay, so the trust gap. We speak, and our facilitator was kind enough to start with the jargon. So infrastructure allocations, alternative investments, volatility, long-term investment, alpha, private equity. That's what members hear when we speak at them. Because as funds, when it comes to investments, we tend to speak at the members, not to them or with them. We speak at the members. So what that does is it creates a trust gap, because they become anxious. If there's something that you don't understand, you are automatically worried, anxious, distrustful. They make poor decisions. Not long ago, the market had a bit of a dip. Thank you, Mr. Trump. And we saw fund credits come down. Immediately, there was lots of buzz and people thinking, must I take my money rather? If I leave it there, will it fall, will my value decrease even more? Lower preservation rates. So the challenge that we're talking about at this conference is not only capital allocation, it's confidence allocation. We've got to put members in a position where they understand the purpose and what we're doing and why it's better to preserve rather than to withdraw. Okay, so hopefully before the session, we were saying, did the portfolio perform? The intention of this session is for trustees and delegates from funds to walk away and ask themselves, did the portfolio create the intended member outcome? Those are 2 very different questions. Because to answer the second question, you need to understand what the intended member outcome was. It shifts it away from pure returns to what are we doing here? Are we achieving the goal that we want to achieve? Okay, so the reality is we have trustees who approve the investment strategy, they allocate to asset managers who implement that strategy, administrators administer the application of returns, unit prices, we'll do that bit, and then members live with the consequences. And I think sometimes in these meetings that we have, we forget. It's 240,000 members, it's 10,000 members, it's 20,000 members, it's the numbers. We forget that at the end of it, the minister used an example of a member at Mercedes-Benz that, withdrew his money, didn't go back into retirement fund savings, and when he retired eventually, there was no benefit. I'm sure you're all aware what the state grant is at this point in time. That's not a livable wage. I mean, we all know what groceries cost. That's 1 basket at Woolies. Okay, so members live with the consequences. Member outcomes, therefore, have to be included in decision-making, even in investment subcommittees, especially in investment subcommittees, is my argument. We've got to bring the member closer to our thought processes when we're doing these things, but also to measure whether or not we are achieving the intended outcomes. So member outcomes for us are fundamental to governance decisions. Behavioral risk, I think, is the forgotten risk. So boards monitor market risk, credit risk, liquidity risk, operational risk, and give you lots of risks that they monitor. But what we don't look at is panic switching. Do we communicate in time? Are we educating our members enough that they don't run the minute where they see a bit of a decline in the fund credit? Early withdrawals are probably the biggest factor when it comes to long-term investments. Low preservation rates. Are we engaging our members sufficiently? We know the retirement pot stays behind, but that's but a portion of the benefit. If we engage them more accurately before they even think about exiting, will we see those rates go up? Poor engagement levels and lack of understanding. Those are the items that are not being tracked by boards. And those are the things that we are asking that boards start incorporating when they are looking at their investments. Why does trust matter? Trust matters because it influences behavior. It influences contribution behavior. If you have a member who understands that this is a long-term investment, there will be downs and there will be ups. This is the process that we're following. He is much less likely to panic switch. He is much less likely to panic switch or to withdraw from the fund if there is a drop in investment returns. Preservation behavior. Members who trust you are more likely to leave their money with you as a retirement fund. Investment confidence. It will mean that they understand that the fund is doing the best job they possibly can at investments. Engagement and understanding. It means that they will be able to, if we build that rapport, they'll be able to come to you as a fund and say, I don't understand what you're doing here. Please, can you explain it to me? Rather than sitting there and thinking, I don't think those ones know what they're doing. Let me take my money and go somewhere else. Right? So trust is critical. And most importantly, it will eventually, if we do all of those things, it will see us improve retirement adequacy. Okay. The South African context, the Minister was very proud of the fact that they've revamped Reg 28, and so we've got greater infrastructure investment opportunities. But how do we translate that into what it is, into member outcomes? So success enablers for us are trustee education. I'm sure every meeting says trustee education. But I'm not knocking the FSCA's training, the trustee toolkit. That's great. But we've got to have more education, formal education for trustees. We cannot have trustees sitting on a board that don't understand what it is they're saying yes to completely. But they've seen 6 other hands go up in the room, so must be the right decision. I agree. They must be enabled to ask, but guys, I really don't. Even your trustees sometimes in meetings are scared to ask. I don't understand it. The investment consultant is alpha and beta and whatever they're talking about, and the trustees sitting there nodding. But you can see, the lights are on, guys, but no one's home. So real education for trustees. Governance robustness. Policies must talk to these things. Our structures must give rise to all of these things. Stakeholder understanding. And by stakeholders, I'm not talking board of trustees, employer, member. We've got trade unions. We've got investment consultants. We've got communications agencies. There's the regulator. There are forums like Batseta that do amazing work. All of our stakeholders have got to get onto the same page. And then clear communication. And by clear communication, I mean don't say alpha to the member. He thinks it's a car. Okay. So, how do we communicate more clearly? The language gap in the industry, we say illiquidity premium. Very confidently in a meeting, sounding smart. The members asking, can I get my money when I need it? Those are 2 very different things. Infrastructure allocation. The members asking you, how does this help me retire? Diversification. All they want to know is my money safe? I get that you're excited about a farm in Limpopo somewhere that's going to plant whatever it's going to do, but is my money safe? What happens if the rains come? What are my guarantees? How do you make sure that my capital is preserved? And then alternative assets. He's asking, why are we doing this? And that's important. Why are we doing this is important. So you can explain to him or her why we're doing this. The administrator advantage. So obviously we talk from a place of being an administrator in the industry. We have a unique advantage in that we, by sheer reason of our function, have more access to members. We engage with them more, right, as administrators, much more than the board or the investment consultant or the asset manager. And so what administrators bring to the party is we have visibility on withdrawal behaviors. We engage the members right then and there. We can tell you usually we go to a board meeting and we say we paid all the claims within SLA. Sure, tick, done, gone. But of the 1,000 claims you got, how many were retrenchments? How many are resignations? How many are dismissals? How many are preserving? How many understand that they can preserve? Those are the questions, and that's a missed opportunity. Claims behavior, I've spoken about that now. But even when a beneficiary comes to the fund, what are we telling them? Yes, there's a death benefit. Your husband had a death benefit, so there's some money for you. How do we educate them to say, you should probably preserve some of this in a trust. You should probably, what does your debt look like? How do we help you? So for me, funds have a responsibility even post the member exiting, because the relationship's changed. You no longer just pass everything to the employer and they deal with the members. We now have a direct relationship. And so the outcome, not just for the member, but for the beneficiaries, is critically important. Financial distress indicators enter two-part. So we know that some members take their money just because it's my money and I can take it. Don't ask me why I'm taking it. But in many instances, the members share with the administrator, my car broke down, I'm in debt up to my eyeballs, So we have, if you're not collecting that data, we need to start collecting that data, because that will inform the decisions that the boards make. Communication effectiveness. This is important. Administrators can tell you, we all run call centers, I'm sure. Call centers, WhatsApp numbers. The questions your members are asking are what is important. That must come back, all the way back to the investment SE, to the admin SE. We must understand why are they engaging. Are they only calling to ask how far are you with paying my claim? Or are they asking other things like, why did my fund credit drop? Why are the expenses what they are? What return am I achieving? Because if they're not asking about returns, do they know that they can? And then engagement patterns. We had, like I said, there was a bit of a drop in the market. We allocated the return. SALT runs a live platform, and so our members have direct access into our platforms. And they also, the fund credit dip a little bit, and our call centers skyrocketed. But for us, that's good, because before, you would wait 12 months to get your benefit statement, and maybe you'd see it in there, and maybe you wouldn't. But now the world is live, and it's real time. And so members are aware. And that's important for us. We would rather deal with the additional calls in the contact centers than to not have members know what's going on with their money. Okay, so for us, the administrator sits with an advantage. So I used Maslow's hierarchy in a different way. Asset managers manage capital. Trustees govern that capital. Regulators oversee that capital. But the people that deal with the crux of the matter, the member when he's sitting there claiming his retirement fund benefit and it's 10% of what he hoped it would be. We deal with that in our contact centers. We see the distress, the tears sometimes, the utter shock in, I thought I was better off than this. So administrators connect the capital to the people. And that is where the trust is either built or it's lost. How we respond to those returns dropping when members call and ask, why are you stealing my money? I'm glad the minister also said people think he steals money, because that's what the administrators get all the time. That is where the trust is built or lost. So as boards, do you know what your administrator is answering when your members phone and say, 2,000 Rand is gone, I'm 2,000 Rand out, what's happening? How do you communicate before we allocate the return to say, there's been a bit of a dip, don't panic, this is a long-term investment? Okay, so the key takeaway for trustees is asset managers tell you how your investments are performing, but your administrator can help tell you how your members are responding. And if our objective is outcomes, then both perspectives matter. Okay, so member inclusion without diluting fiduciary responsibility. The slide was placed on purpose. I'm not saying the members should make the decisions for investments. You don't even want me to make your investment decisions, trust me. So we're saying members must not select asset managers, select asset classes, approve mandates. I'm not saying any of that. Members are not decision makers. But what they are decision informants. They must influence the decisions that we make. Education priorities, communication approaches, outcome measures, most importantly, and behavioral insights. Like I said, you can have two members on the same fund with the same rate of return. But if the one member's behavior is to stay on the fund, consistently throughout the period, and the other one is in and out, exits, during the course, you have two exceptionally different retirement outcomes. And so behavior is important to understand in your investment decisions. So current board questions sound a little bit like this. Do we have an approved IPS? Did we outperform the benchmark? Are we Regulation 28 compliant? Yeah? And those are good questions, and they are questions that must stay. What we're asking for you to do is to add questions. Future board questions. Did members understand the strategy? Did we see preservation decisions improve? Did member behavior support outcomes? Did trust increase? So all of the things that we're doing now is what we should be doing. But we're saying, if we're moving to an outcomes-based environment, we've got to enhance the questions that we're asking, the factors that we take into consideration. So for us, the future governance dashboard, the current dashboard has returns, benchmarks, are the fees competitive, Reg 28 compliance. You keep all that stuff. What we're adding is preservation rates, retirement adequacy, engagement levels, behavioral trends, and trust indicators. So we're by no means saying that we're doing anything wrong as the industry, but what we are saying is that we are required to do more now in an outcomes-based environment. And so we need to expand the questions that we're asking, the way we apply our minds, and the items that we take into consideration. How do we do this? This is an infographic. So SALT utilizes a bunch of methods or channels, if you will, to engage with our members. And I'm sure that your funds have similar items. If you don't, talk to me. But SMS and WhatsApp, email, fund videos, posters, newsletters, websites, physical employer visits, contact centers. You utilize those items. You're generating data every minute of every day. But are you harnessing that data? Are you analyzing that data? Are you using it to inform the decisions that you're making as boards? Okay, how do the asset managers help? I'm scared of the asset managers. I specifically didn't wear a suit so that I wasn't confused today. So we move from the asset manager saying we allocated 10% to infrastructure. We move to this investment that we're making supports inflation protection and long-term retirement incomes. Same thing. It's just being framed differently. It matters for the member that you frame it differently. Reporting has got to be enhanced to explain the purpose of the investment and not just the performance. Okay. So we're talking about an African collaboration opportunity, and apparently our border posts are terrible. So cross-border investment requires regulatory alignment. I think that's a given, that needs to happen. But governance alignment is also important from a fund's perspective. Shared communication frameworks. It should be that on the continent, if we say something, as Africans, we all understand what it is that's being said. And that's important. And the way to achieve that is to communicate clearly, effectively, and with the simplest of terms. I'm not going to repeat alpha because I think you've got my point. And then consistent member messaging. It's not enough to send out a newsletter once a year. It's not enough. It's not enough to, do an annual report and say, we did well, we outperformed the benchmark. We've got to be talking to our members all of the time. And it's a dialogue. Because if they're not engaging you back, the message is not being delivered. If you're not seeing feedback from your members, they're not getting your message. They either don't understand it, it's not reaching them, or it's not landing in the way you want it to. So the metric is not just, well, we sent out a newsletter, or we sent out a performance tracker, or whatever it is. It's not good enough. What feedback are you getting? And that feedback comes to your administrator, because they engage your members much, much more than any other stakeholder on the board. And so you've got to talk to your administrator about what it is they're hearing. So for us, collaboration is not only about capital, it's about confidence. It's about the members trusting the board, the administrator, the asset manager to do what's right in order to achieve the intended outcome for that member. So we come back to trust. So I'm standing here on my little soapbox. I was like, I must give solutions, right? So what we're saying is proposed actions for boards, member impact assessments. Develop and include the relevant member impact assessments for your fund. Behavioral metrics in board packs are critical. They must be discussed. How many times are people withdrawing? How many times is the same member withdrawing? Is this his first time or his second time? Why does he keep withdrawing? Understanding behavior is critical to understand what action is required. If you don't know why he's doing it, you don't know how to educate him to stop doing it. Or how do you help him to get to a point where he understands this is a long-term investment. You've got to measure trust indicators, communicate role responsibilities and success criteria from the start. Require joint communication strategies. So we have the communication subcommittee on most funds, and they communicate all these beautiful infographics and all of those. But like I said, they need to talk back to you. So sending out that newsletter is fantastic, but are you getting any feedback from it? Are your members responding? And that's important. And then administrator insights. I think that's probably the easiest win. Is utilize the administrator insights to support your investment decisions. And if your administrator isn't reporting like that right now, then it's a conversation to have with them to say, we'd like to unpack the behavioral impact on investments. Okay, I wanted to show you, so we didn't just come with problems today to say we're not talking effectively to members. I wanted to show you what this could look like for a member. So in our business, we find that members spend time on their mobile phones, a lot of time on their mobile phones. And so instead of just playing on TikTok all the time, we built calculators into the member app that we've rolled out. And so members can sit, and we see them play with these tools in the middle of the night, sometimes early morning or whenever. So they can then see how the decisions they make in these different quadrants, so some of it is investment, some of it is withdrawals, living annuities, etc., it immediately shows them what the impact is of the decisions that they're making. And for us, that was so important. In addition, we built calculators to show, because we saw big withdrawals on Two-Pot. So we built a calculator, and then post the withdrawal, the member comes to us and says, I didn't get my money, SARS took all my money. Like, so now? I'm like, well, SARS took your money. So there's nothing that we can do as the administrator. So we built a tax calculator to say to the member, all things being equal, go and put your calculations in there first and see what the tax implication will be before you withdraw. And so these are the things that we're talking about. Tools like this to help the member. You know, you're saying to him, tax is 40%. doesn't mean anything to a member at that point in time. But you give him a tool that he can go and input on and play with, and immediately, because he's doing it himself, there's more understanding. Okay, financial wellness. We know that as boards, you are responsible for retirement outcomes. But the more you know about your member, the demographic, what age group do they fall in? Are they married or are they not married? How many dependents do they have? Depends on the province they come from, right? So all of those things we must take into account in order to understand whether we are going to meet that retirement adequacy outcome. So we ask stuff like debt, what's your income, how many dependents do you have? They fill this in at their own speed and on their own time. And then we'll show them we ask about insurance, we'll show them their financial wellness results, etc. This tool here gives the board information to say how many members have completed this and say that they're in debt up to their eyeballs. How many of them have completed it and said, well, they've got lots of savings elsewhere, so why are they not doing additional savings into the fund, etc. So we didn't want to just come here and say, well, we need to talk better. These are some of the tools that you can employ in order to get your members thinking about these things and interacting with these things. Okay. So in closing, Africa doesn't have a capital shortage. I put this in my slide before the minister spoke, and then I thought, I hope he doesn't say something contrary. So he didn't. We don't have a capital shortage. We have a confidence challenge. That's why our capital is laying overseas. We're not unlocking it here. The next evolution of pension governance is not better investing. It's because we do well from an investment point of view. It's making decisions that are informed by member behavior, understood by our members, and trusted. Boards do not only govern portfolios. Your responsibility is the outcome. Okay, so for us, the future of retirement administration is trust made visible. Thank you very much, ladies and gentlemen.
Thank you, Nazlie. Don't run away. Do we have any questions for Nazlie? I think this is such an important topic. Yes, sir.
Thank you. My question is very simple. I give government my money as part of the infrastructure development. And by the way, if government cannot handle its money properly, we're not children.
Yes.
And we take the money of the workers that is supposed to be a future pension fund and give it to government. How are we going to, the simplest I know is that maybe you can buy bonds in the cities or in provinces, if ever they are there, or in government retail bonds. But now if I take the money of the workers, give it to the government, whichever way it is, with the retail bonds is I can see what's happening. But now just saying, the government saying, give us the money for the infrastructure. And yet the mechanism and the way that money is going to be spent and the returns, it's a little bit tricky for us. Because if you've got R1 billion to give government for its water issues, and yet they themselves cannot manage water in Limpopo, the Moyehle project of water has been sitting there for more than 20 years. Every year there's money being pumped in. The SAA issue and all the other SOEs.
Yes.
How are we going to trust government? Like your simple question, let's give you 100,000. Do we trust that it will, in the next 30 years, it will actually generate money or something like that? So I just want us, before we leave here, to say, infrastructure, we understand, we need all this infrastructural development. But the issue is, if we give money to government, will we get something? Unless if government goes with the private sector, private partnerships, and then they manage our returns. Because what we are about is capital, returns. I'm a unionist, but I'm into capitalism as well at this stage.
Right.
Because I'm a trustee.
Right.
So therefore, we need money back.
Yes.
That's all what we can say. Thank you.
Thank you. Yeah, I think that the question was more for the minister than me, but I do want to make a comment. There are different ways to skin a cat. I have in the room with me a client that wanted to invest in infrastructure, but had the same reservations that you did. And so what they did was they chose housing, and they built their own housing project. And so they understood where their members are, they understood what the need was, and they responded to that need. You fine if I name you? Okay. So the Transport Sector Retirement Fund did that. They did analytics, they understood that housing is a crisis in the country, and they responded to that need from a private equity point of view. So I'm not saying, on record, I'm not saying don't give government your money, please. I don't want my tax to double. But there are other ways to do these things. And I do think that there will be partnerships with private, yes, in order for government to unlock the capital. I think our chairperson wants to respond. It's always dangerous to give him. Thank you, sir. I hope I've covered you. Yes.
Thank you, Nancy. That was an enlightening presentation.
Thank you, ma'am.
Well done. I am from Lesotho, and I have a question. I could tell that you were very careful what you were saying, to say, no, you're not doing, we are not doing, I'm not saying you're doing anything wrong with
Yes.
the current setting. I could tell that you were very careful to say that. But you are now saying, let us introduce other people because we are holding other people's money. Let us bring them on board. So my question is, and I could tell you were trying by all means to say, I'm not saying members should make decisions.
Yes.
But the question is, how are you then going to talk to members or engage members to the extent that we don't risk that border to say, you have to come, but here is where you should stop? In other words, the question is, how are we going to manage the risk of members now having been called to suppose that they have to tell you, do this and don't do that?
Sure.
I just want you to
Yes,
assist in that.
to expand on that.
Yeah.
Thank you. So for me, it's in the way that we implement our strategy, right? So when I say engage your members, we run, for example, contact centers in our business. And those contact centers support a number of funds, and we field upwards of 50,000 calls a month. As an administrator, we then go and analyze that data to say 25% of the members that called this month called because they're unhappy with the return on the portfolio. That's data for you. Then you respond as a board before they ask you the question, because now they're talking to your administrator. They're saying, my money is down, are you stealing it again? So the administrator can give you that data before the members start a riot, and you can say to them, we understand that you're unhappy about the returns. These are the reasons the returns have dropped. So in that way, stuff that inform your decisions, I'm not asking you to ask the members about investments. I'm saying, understand what the age profile is of your membership. And what does that mean with that age profile? Understand that in your fund, members withdraw on average once, twice, 3 times, 10 times, on average. And then break it down into segments and say, we have a group that withdraws every year because they can, and then another group that stays steady, and separate those groups in terms of your thinking. So inform your own thinking. I'm not asking to call the members, because that would cause havoc, I agree. Don't call the members to ask them, what investment would you would you prefer? In the case of transport sector, they responded to a need that was brought to them by the labor unit or the labor contingent of the board. And that's how they did that. They didn't go to members and say, where would you like us to do this housing project? They used the data that they had and then decided where the housing project would be. I'm not sure if I'm covering you. Yes? Happiness, thank you.
Just on that, I think it's very important to understand, and Nazlie has mentioned a lot of things. We're not asset managers, so we're not going to tell you where to put your money. And as she says, we hear that a lot of times the administrators stole our money and. So we're in the middle. All we do and what we're trying to do with the IT and tech that we're building daily is to get the data for the boards, or to enable the board to understand the data, and together with us, because we are in partnership. I've been at I'm not going to mention it, but at a golf day of a union the other day, and I've said it very clearly there. We all say we're working together and the member, but if I'm going to stand there and tell you who is really working for the member, it's actually a pity and a shame. We are not working for the member, and as Nazlie has said, we are just there, we're building data and tech, because that's the future. It doesn't matter how you see it. Robots and AI and all, and I don't understand it, but we are trying to get the data to be able to connect the fund together with us to the member, that we can all understand and make a better and more informed decision, not to member to make it, but for the funds to make it together with the administrator and the investment consultant, to be able to do the better for the member at the end of the day. That's all we're trying to do.
Thank you. I think it's clear, knowledge is power. And what trustees don't know, they can't use to help their members. So getting the information helps. I saw a hand. And that side too.
Yeah, so great presentation. Thank you.
Thank you, sir.
Very informative. And I think for me, the most powerful slide, and I think that remains the elephant in the room, is that Africa does not have a capital challenge, but a confidence challenge. And I call it the elephant in the room because while we all obviously have, a right to our own opinions, but if we all still sit in this room and have a negative opinion or aren't optimistic about the potential of a public and a private partnership, and we hesitate, that confidence is never going to get us anywhere. Now, in an ideal world where government might not be perfect, and I think they probably get the biggest stick in terms of confidence about their perfection, because our private organizations are not perfect, far from perfect,
Agreed.
but they don't get the same slack. So for me, I think if we were to change, that narrative for me. So I listened to your presentation, and while taking notes, I'm saying, from a transition or the narrative transition agenda for South Africa, for Africa, as long as we sit in our respective boards and the conversation doesn't start there, the conversation doesn't start in such conferences, and we still all leave, after all the monies that we spend in these conferences, and we still hesitating and don't have the confidence, we still have a long way to go. So I think maybe for me, the question is, at what point do we draw the line in the sand and back the horse? Because no matter how, if someone says to you, comes with you negative, how much are you actually going to achieve? And I think we've got this negative perception about this country and the government, whether it's right or wrong, but give them the benefit of the doubt and let's start that conversation. But without drawing that line in the sand, for me, we're not going to get anywhere. And I think the question is, at what point do we draw that line in the sand?
I don't know. I feel like, people are scared to say they don't know, but I don't know. I think it's a conversation that we need to unpack between the private sector and government. Like our chairperson said, we're not asset managers, we're administrators. But we definitely identify that there's a confidence challenge. And like you said, if we don't start those conversations, we won't change the narrative. The Batseta conference is, it's not a cheap event to attend. And so you need to take things home with you from this conference that challenges the norm, that evolves us as an industry and sees that evolution coming through. Conversations in rooms like these are what will push this industry into a new era. We're already seeing, the minister said the coffee bill is going into parliament. That changes again. We first had default regs and then we had two-pot and now we've got the coffee bill coming. There's lots of change happening. All we're saying is don't forget that Mr. Molefe has to retire at 65 and have some sort of benefit that is going to help him through his retirement. Because if we're not achieving that, then we're failing as an industry, as a collective. Whether we're at asset managers, administrators, boards, as a collective, we are failing. And that metric, I know we talk about net replacement ratio, etc., but the reality is that on the ground, sector funds are different to type A umbrella funds, which are more corporate funds. We've got to tailor our comms, our strategies, to the people that we serve. But if we don't know who they are, what's important to them, what their requirements are, you can't build a solution when you don't know what the problem is.
There's another question that side, and then one at the back.
Yeah, thank you very much, and good morning, everybody. My name is Pakofi. I'm from Ghana. I think my brother took the wind out of my sail. And I mean, from Ghana in 2022, we had a very peculiar experience. I'm not sure how you guys would have navigated it as an economy. We had a sovereign debt default. At that stage, inflation was skyrocketing. Now, how do you convince an individual who is saving for retirement that tomorrow is going to be better? We are not going to come back to the same story. So I think the question or the conversation should go beyond just what we are having in this room, but we also need to engage the government. Because within what we are trying to achieve for the individual, as much as the individual may appreciate our efforts, we are working within a context. And once the person managing that context throws everything out of the window, whatever we say would not count. Additionally, as much as we say member outcomes is great, desired member outcomes should be, from the Ghanaian context at least, and a few African countries I've worked in, what I notice is returns is skin. Returns comes up to be everything. And we've gone to, we've digitized so much that we've given so much transparency to people. So once their fund rules allow them to have access, notwithstanding all the nice things you tell them about, once they need cash or they need money and their fund rules allow, even when their fund rules don't allow, they try to bend to access it. So I agree with you entirely, but I think it takes more than just engagement. It takes collaboration, it takes partnership to build the trust. So I just wanted to contribute that to this conversation. Thank you.
Thank you, sir.
Thank you.
Okay.
There was one hand back there.
Oh.
And then there's one hand in the front, and then I
There's
have to call it because I'm standing between you and
Your tea break.
Yeah, sorry, thanks very much for the presentation. My name is Bongi. I think mine is not a question, but to say thanks for the presentation. And I think there's also a big need, for member focus, with the two-part and the behavioral issues that we're going through. So I'm happy that you guys are doing quite a lot around that. But I think there was a question that was raised by one of the trustees, to say, how do you trust government with the member monies? I think it's quite clear that we need to have infrastructure spending in the country to improve a lot of things. The members in the room can participate in the process. And ultimately the objective is to give members the return on investment. And I think we shouldn't sit back and just watch government implement these things. We should be part of the process so that there is the transparency that we're looking for, in terms of what is it that government wants to invest in? Is there private, the PPPs are quite critical. I mean, if you look at the power supply issue that has been resolved, you look at the port issues that have been resolved, you look at the trains, So I think those things, the retirement fund industry is missing out on. So we need to ensure that we participate, in those opportunities, because I think it can give members a nice return on investment, but the infrastructure has got to be there to, to monitor, the performance, etc.
Absolutely. And I don't think we must lose sight of the fact that you give members ownership in these things when you partner with government. So, and I absolutely, as our chairperson said, we're administrators, we're not asset managers or investment consultants, so we're not telling you where to place your money. But I know, watching the transport sector project that went up in the Vaal, that it gives them ownership. You know, members use roads, they use trains, they use those things. And so when a member can stand there and say, my retirement fund contributed to this, it gives them pride. That's the trust we're talking about. That's that ownership that we're talking about. But they won't know that if you don't tell them that you contributed. And so we're talking about how it is we engage with members. Don't say we achieved, and you must say we achieved 6%, say we achieved 6% or 12% or whatever it is. But say, what's the meaning behind that? We also built a road, we built a mall, we created jobs. And that's the part of the narrative that we're missing out on. And that's the part that we're saying needs to be lifted up by boards, by the role players in the industry.
Time is up, but I do know Nazlie will still be around.
Yes.
If there's anybody with questions, please approach her afterwards. There are refreshments downstairs in the exhibition hall. I trust you all know where it is.
Otherwise, just follow the
Follow
crowd.
the leader. Thank you, everyone.
Thanks,
Have
everyone.
a good day.